Hey guys, how's everyone doing? Just tuning in here for another couple of updates. We went ahead and put together some really cool information, just talking about out there on Twitter, talking about what we're going to be diving into today. So I kind of want to talk a little more about some of the news and what's going on specifically around our positions in the space when it comes to some of these slogans, blockchain as a crypto problem that we've been looking into, and to be honest, just talking about like APR in the DeFi space in general. I think these are really important topics that kind of start the conversation around, what does sustainability mean to our company, and what does it mean to how we're going to continue to build, advance as an organization into the future. So with that being said, I think I do want to go ahead and just kind of dive into. There was a tweet out the other day. That Unifi responded to. I wrote back as well, just kind of talking about blockchain technology itself. And I think it was Bill Gates just kind of like commenting on how cryptocurrency is kind of not a healthy thing necessarily in the way that it's been expressed today. And I think that's kind of a valid statement. That's like a valid position to take. And I think that it's valid because he's not talking about, from my perspective, he's not talking about blockchain specifically. He's talking about cryptocurrency. And this is kind of exactly where we come in. We've been talking about this now for some time, this concept of what is a cryptocurrency versus what is a crypto commodity. And that's been a major part of this kind of dialogue, especially the last, few months. And I think that's an important thing to differentiate because for those of you that have been in the space for some time, we've seen this evolution take place. We've seen, we saw the cypherpunks come in, Bitcoin coming in as like kind of an alternative financial system, this kind of challenge to banking and some of the issues that we saw there, and kind of a way for people to express themselves in a more free or private way, financially. And it was meant to be fair, and it was meant to be a more sustainable system from the get-go. And we've seen that kind of message evolve. And as that's evolved, very cool and creative technologies have come out of that. A lot of the DeFi space is very cool and creative technology that had a ton of successes that we're going to talk about in a second. But I would say that at the same time, it did embody some of the sustainability issues that cryptocurrency was kind of starting to embody as well. And that comes down to things like, looking at gas tokens and looking at how that's kind of structured in such a way where, does a blockchain need a gas token? There's been these concepts of, private chains, to some extent, those have existed for quite a long time. And for me, I think that's really been a good testament to that's really been a good testament to some potential future use cases that we haven't seen yet. A lot of people have been attracted to our space because of one expression. That expression of the technology is cryptocurrencies. People are coming in and seeing, oh, this token can 100x. I want to be a part of that, or this token is going to partner with Disney. I want to be a part of that. And we've seen so much news, and so many things have kind of marketed us to kind of participate in this cryptocurrency ecosystem, that it kind of falls apart when you start challenging that and saying, maybe these aren't necessarily currencies, but they're commodities, and when you consider, a barrel of oil is a commodity, that's kind of what that functions like. It's very hard to separate that from like things like what is a gas token but a commodity. And so commodities are difficult to execute trade with because they're volatile assets. And so it's very hard to buy a cup of coffee in barrels of gasoline, because that means, or I should say barrels of oil, because that cup of coffee is going to change on a day. The cost of that is going to change on a daily basis. And so for me, it's kind of a good example of like where this thing kind of starts to break down once you separate the commodity from the currency aspect. And that's why we have fiat currencies. And to be perfectly honest, from our perspective as a company, that's why there are cryptocurrencies as well, such as stable coins are obviously cryptocurrencies. There could be some sovereign ones and things like that come out in the future. but even things like, you know, Bitcoin is doing a ton of good and kind of blurring that line there. But for me, I think that's like a good starting place that we can like look at and say, okay, the industry is pushing in this direction. So what's going to come next, right? What is the main adoption? How is that going to happen? And I think that for businesses to actually start to adopt blockchain technology, they're going to have to use cryptocurrencies. They're just going to have to, because if you're a business, why would you take on the risk exposure of a commodity that you have to hoard basically just to participate, you know, on top of the cost of then using that system? And I think that's kind of the challenge that I think that our space kind of has to work on and start kind of resolving. So yeah, I think there's like more to come on that, but I think that's going to come out as we get further into this. I just think that it's a good thought to kind of bring to the space when you're considering, you know, what am I doing when I invest in a crypto commodity? You know, what is the use case of that? You know, is it an inflationary token? What does that look like in the real world? And I think that it kind of challenges the sustainability of a lot of the models that we have, specifically DeFi. So that's kind of the other piece that I want to talk about here today is DeFi. And I think that when I look at sustainability of the DeFi space, it just shows the entire crypto space on this micro scale, on this really fast-paced scale, because, you know, DeFi came in hot. We saw a lot of very cool companies come out, tons of innovations come out of that. But I think that, you know, it was just last night I was talking to some of the team about the things that attract people to DeFi. And the comment was people are attracted to DeFi because of the APR. And where I think that may have been the case at some point in the future, I don't think that anyone wants APR today. In fact, I think there is no evidence to support the fact that people do want APR, which sounds ridiculous. But you take a look at kind of the space and where it was, you know, terms crypto and APR, these are really popular search terms that used to come out all the time. There were things that people like looked into. Actually, let me see if I can share my screen here. I'm not sure that's going to work. But anyways, yeah. So just taking a look at things like, you know, search terms like, you know, APR has been a very at one point what was an extremely popular term. It was extremely well searched. A lot of people were being attracted to it because they were saying, hey, I've got this crypto thing. How can I earn APR in DeFi? All my friends are starting to. But I think that what happened is when people got more involved into DeFi, they started to realize kind of some of the downsides of, or some of the potential risks of participating in these systems. And that's these derivative reward tokens that may not have the same value as the liquidity you're providing, or maybe a more volatile asset than the liquidity you provide. If you provide 2 stable coins and you get back this extremely volatile derivative at a very good APR, that may be a little deceptive in some ways. So that's something to consider. Then at the same time, if you're then being exposed to things like impermanent loss, which is an extremely complex subject, something we could talk about a ton, and it's all about semantics and how it's defined, but impermanent loss is certainly a risk too. And a lot of people got hurt there. So I think that people that were involved in the crypto space approached DeFi, they saw these fantastic yields, which some people did get, but ultimately it burned out very quickly because of the fact that there were these things working against it. And then that was culminated in the fact that we just saw several multi-billion-dollar companies just evaporate. You know, we've seen Celsius basically gone. Like, and I think that kind of rocks the entire space. Like, if a blue chip, you know, top of the line crypto platform like Celsius can just go away, well, what does that mean for the rest of the DeFi space? You know, what does that mean for these concepts? And I think that it kind of took the whole, before they were even gone, we saw this downtrend, but it kind of took this concept of people want APR. I think that's gone. I think what people want is people don't want to lose money, and that's basically it. And if you take a look on DeFi Llama is a great website for these kind of things. But if you just take a quick look at DeFi Llama and what's going on here, I think it's pretty obvious. A lot of these APRs are, or I should say, these are APYs that they show here. So a compounded version of APR. So let's say it's overstated APR. They're not that good. They're really not that good. Even some of the biggest one out here, STETH, for those of you that don't know, it's like staked ETH. Essentially, when you stake ETH in ETH 2.0, it gets like kind of locked there and you can't access it. So they minted this derivative token, which is backed by that. So that's very popular right now because of the merge and whatnot. So obviously that's the biggest TV up in the space, $6.68 billion. But when you look at that compared to the rest of the rest of the crypto market, obviously, arguably DeFi is less than 9% of the crypto space, and those numbers are pretty liberal, I should say, because of all the derivative tokens and issues. But if you just take a look at these top tokens here, they're basically in three different kinds. There's ETH of some kind. There are some Bitcoin platforms, and there's stable coins, and they're putting tokens in here at very, very small APYs, and it kind of draws attention to the fact is like, why are people putting $1.2 billion in wrapped ETH into Aave for less than 1% APY? And I think it shows that people just really don't want to lose money. That's what's going on, because there are platforms out there that give better that do give better APRs than Aave, but people don't use them because they don't want to be exposed to that risk, let alone the unknowns of derivative tokens, of impermanent loss in these things. So for me, I think it's the same thing as what happened in like the Great Depression, right? You had banks that were doing these cool investments and all these cool things. And the moment that there was a run on those banks and people started to pull their funds out, what basically happened, banks started going out of business. They ran out of money. They couldn't support the withdrawals of people's own money. Not dissimilar to what happened with Celsius. And what happened then is, the banks that survived, they came out and they started taking their cash. They put it right in the front windows. They put their cash in the front window to show, you can trust us. The money's here. You can see it. It's there. So if you come in and you cash out, the money's there. And that happened. And those banks, those are the ones that people deposited their money into, because there wasn't the risk of like, what's happening in that back office? What are they doing outside of here? Like, what's going on with their actions to generate additional yield? And I think that's the same thing that we're seeing here. That's why you see things like Aave had less than 1% APY, has $1.2 billion in wrapped ETH. That's why you see so much participation around staked ETH, because from their perspective, it's a backed token. It's basically the same thing as UP, but UP can be redeemed and STETH can't at this time. So it's from my perspective, it's kind of the same thing here, where the difference is the appetite now is less, how do I make as much as I can, than, hey, I just want to continue to participate in this crypto space and I do want to generate some yield, but I really need to know what's happening. I don't want to like lose sight of the funds, or else I could be exposed, like, Celsius, for example. So I think that's what's coming with DeFi. I think that there's going to be a lot more focus on, being a sustainable, transparent company. I think we're going to see yields continue to kind of level out. And I think what that's really going to do is push us more into the concept of, savings accounts. Like I don't want to be exposed to the investment strategies of some third party that may be anonymous to me. I want to, be exposed to no potential risk or little potential risk, and just be able to maintain those assets myself. And that's why I think that as we continue down this line of building on DeFi, the next version of DeFi that I think is probably going to take off is more in the lines of like a savings account, a savings account for crypto. So anyways, nothing to do specifically with what we're working on. I saw this out there, and I was looking at these, and I was looking at the size of the DeFi market today, and I'm like, why aren't people like even at that 1% APY, $1.2 billion worth of ETH? That's not a lot. Like, if it's free APY and everybody agrees that it's real, why isn't there more money in there then? You see what I mean? 6.68 in staked ETH. Why isn't there more? And I think that's kind of the point, is maybe the reason there's not more is because we as an industry have broken the trust of the crypto space by taking terms like APR and APY and making those words mean scam here, and the bigger the APR, the bigger the scam. Maybe that's kind of what's happened. And so those terms have kind of been destroyed in our space just by these companies and actions. So I think it's natural that we see this, and I think in the future we're going to see people going back into DeFi, but I think it's going to be a very different future. So with that being said, guys, I'm trying to pull my punches here as much as I can, but to give you some insight on what is so interesting to me about the space and what kind of drives us as a company when like we're saying we want to be more sustainable and build on the future and do all of these cool things. We sit down and we debate these things. We hotly debate these things inside of our company just to make sure, like, hey, like, what does it really mean to be a sustainable company, and how can we really build on those notions going forward? And yeah, this was a big topic, a hotly debated topic internally, and I'm sure more than half of you disagree with me on this, at least, probably more. But I think it's a good thing to think about is, if we're looking out there and we're seeing these huge APRs, I would say most people, obviously most people are not participating in those pools. And the question is why? Why aren't you? And you just have to ask yourself that question once, like, why aren't you in these pools? Why aren't you staking? Why aren't you doing these things? And it's because it costs something, and that something that it costs is your confidence in that system or trust. So with that being said, guys, thank you all so much for tuning in. I really like talking about this stuff, trying to be more open about what we're kind of looking at in the future. And I think we're going to even start blogging a little more openly on these things as well, just giving more insight into how we're building. So thank you all so much. Everybody have a great rest of your week, and I'll see you all soon. Bye.